Hi there! In this digital age, we now have easy access to various investment instruments such as stocks, bonds, and mutual funds. One key skill we need in investing is the knowledge of evaluating our returns, and this video will help you learn that. Let's look at Michelle's case. Michelle started investing her money 5 years ago. She has some stocks and mutual funds. In both, she buys once and sells the stock or mutual fund shares later. She has recently sold 2 of her investments and would like to know her actual yield. Her expectations are shown, and they are based on past performances. Michelle lists down the dates and prices. She will use Microsoft Excel for all her calculations. To be comparable to her target yields, she will compute the compound annual growth rate. The Excel formula is: rate is the compound rate and is what we are looking for. N per is the period between the buying date and the selling date. Since she is getting the annual compounded rate, this is in years. PMT is used when the investment is done periodically. This is not needed for Michelle's case. PV stands for present value. This is the buying price. FV stands for future value. This is the selling price. Here is Michelle's Excel worksheet. For NPER, she uses days 360 formula to get the number of days between buying and selling days and divide by 360. PMT is set at 0. For PV, she types a negative sign first before the value since the money came out of her pocket. The formula for rate is shown and the result is 7.4% versus 15% target. Michelle realizes she is below her target. Now do the same for Michelle's mutual fund. You should be able to get 1.6%. Michelle's actual returns are lower, but she is not discouraged. In the end, she still had gains. Michelle knows that she can still adjust her investments to meet her goals. Knowing this simple Excel formula is already a valuable learning and can help you compute your different investment returns. It can be used to know an investment's past returns or to time the selling of your stocks or mutual fund shares. Computing for your investment return is important for making good financial decisions. We encourage you to know more about investing because an investment in knowledge pays you the best interest.